Hey folks, welcome back to episode 16 of ICT's 2024 mentorship. In this video, I am going to explain my understanding after watching that specific video. So I will try to give you all the information from that specific video. But before going over there, as I'm going to give my opinion or my understanding, I would love to clear one thing. And that is, I really don't like the way ICT is changing his own word by this mentorship. I'm sorry if you think I'm just going against ICT. No, I'm not doing that. Why I told that? Let me clear that first. You can see there is the set. If you toggle it on, look over here, this volume balance. Okay. When I toggle it on, this is a smaller fair value gap. Sorry, this volume balance. Okay? So let me mark that volume balance over here. Now I'm just toggle it off. Look at this bigger volume balance. Okay. So in ICT's 2024 mentorship, he told that he loved to use this bigger volume balance. But in this specific video, he has used the smaller volume balance just to show the precision. I didn't like it. This is my opinion. I can be wrong, but please don't judge me. I just expressed my opinion over here because he has used this smaller volume balance just to show the precision, which I really didn't like. But as it is the way ICT explained, I'm gonna explain that the same way. I hope that it's gonna be insightful for you. If you like it, don't forget to give me the thumbs up and don't forget to subscribe to my channel if you are new. Over here in this daily chart, keep that in your mind. This is that daily rejection block, the weekly 50%. I didn't mark the weekly 50%, that week 50%. This is that volume imbalance divided by quadrant level, and the dotted line is the bearish order block mean threshold. So this is the bearish order block, this is the mean threshold. This line, see this line, it is the daily sell side imbalance, buy side inefficiency. So keep all of this line in your mind, because when I'll be in lower time frame, at least this this area will be important. Okay. When market was over there, ICT was looking for buy. Now, when he was looking for buy, he was looking for every single specific level. This first, this low, that not low, that high of the daily sell side imbalance, buy side inefficiency high, this volume imbalance, the mean threshold of that order block, then the rejection block, and finally the 50% of that week. He was looking to see that how it can reach over any of this level. At the same time, you can see this is that volume imbalance. First, market went through this volume balance one time. Then it went lower, go back again above this volume balance. Went lower, come back again and trade that that rejection block. Fail to trade that constant crossment. Show us the weakness. Then fall. What a nice fall. After that fall, when market started to go higher again, ICT doesn't want to see that market is going to work with the upper portion of that volume balance. So it is going to trade the 50%. The lower quadrant should be, the lower portion of that volume balance will be traded. It is not going to be traded the upper portion of that volume balance, then it will fall again. So that was his expectation, and I just explained that. Just remember, this is the mean threshold of that bearish order block, the high of the sell side imbalance, buy side inefficiency. That line, these two lines, keep that in your mind. I'm just going to remove this line and remember this three drive pattern. After seeing this three drive pattern in a specific buy side liquidity, if you see this type of big move, then you should expect that it is not going to work with the upper portion of any kind of higher PTRA. Okay, over here he has used the volume balance, lower PTRA, and trade the order block mean threshold as well. Now I'm going back to 1 minute chart to talk about the price action, but before the Friday price action, I would love to go back to Thursday price action first. So over here, this is the Thursday price action. Now around that area, this is that daily bearish order block mean threshold. This is the sell side imbalance, buy side inefficiency high. Okay, these two line. Remember that two line. Now when market has traded that area above this new day opening gap, it went above this new day opening gap, trade that sell side imbalance, buy side inefficiency. The lower portion, okay, bodies worked with the lower portion. Wick did the damage, but bodies were in below this 50% of that bearish order block. Then it went lower, take this low, went higher again. After trading, after went higher, it went lower again, take that liquidity, went higher again. So all of this area back and forth, made this a balanced price range. After making this balanced price range, then market left that balanced price range with displacement. Look at the speed. This type of speed will tell you that no, market is not reaching this balanced price range again. It is keep falling because it is fully balanced, and market shows us that I am not willing to go to trade that balanced price range one more time by showing us this speed. Okay. So over here, if market come back again to the low of that balanced price range area. So let me mark the balanced price range area. So this is the balanced price range. Here, if market come back again to the low of that balanced price range, then it can be the high resistance liquidity run to go above those highs, its relatively equal highs, and that high. It is going to be the high resistance liquidity run. You should not participate in that specific run. Instead, if you see market come back again around that area, you should be sidelined. Okay, you should not participate in that price action. Now over here, I would love to talk about this price action a little bit. When market has traded that line, see this fair value gap. When market go below this candle open, just by that candle, when it go below that opening, it is a valid change in state of delivery. That means that is going to be your bearish order block. Then this up close body close candle, which is also the order block, but it is actually the accelerator order block. That's why ICT called it propulsion block. This is the propulsion block. So market went lower, come back again to trade that propulsion block, went lower, use this new day opening gap as a support, come back all the way through here to trade that propulsion block again, then boom, trade the order block mean short, boom, the displacement, and then market keep falling. So keep that in your mind. This is that balanced price range area. I am going to go to the Friday price action now. Okay. So over here, just give me little time over here. Okay. This is that balanced price range area. So over here, I would love to talk about the price action over here now. When market has opened around 9:30, that was the 9:30 open. When market opened over there, this was the first fair value gap after 9:30. If you go to your regular trading hour, in regular trading hour, you will see this is the first candle. Okay, the one candle can't make a fair value gap. So the first fair value gap you saw from the electronic trading hour, you are not going to use that fair value gap as your first fair value gap after 9:30. So after 9:30, from the 9:31, wherever you will find the first fair value gap, that is going to be your first fair value gap. You are going to mark that fair value gap. You are going to use that fair value gap until the end of the day. Now, I told this before ICT actually in my live stream, but now ICT is giving the confirmation that I didn't observe the price in a wrong way. I'm sorry, I have added this small information over here for your kind information. I talked about this before ICT, the first fair value gap after 9:30. Okay? So market has you are going to mark this first fair value gap until the end of this of that specific day, because you are going to get a lot of precision over here. Now, so far from 2024 mentorship, what you have learned around the opening gap, you are going to mark the sell side liquidity and the buy side liquidity. Now, as you can see, this high and that high, they were relatively equal highs. Mark them as your buy side liquidity. And you can see this is the relatively equal lows as your sell side liquidity. After 9:30, by using Fairchart Powell Speak news, market went higher, take that buy side liquidity. Are you going to participate in that run? No. Why? Because this is the Judas swing. You know market is going for that sell side liquidity. So far, we have learned it from ICT's 2024 mentorship. What else should you do? Mark the opening of 9:30 and the closing of previous day. Okay, this is your opening range. That range, most of the time, 70% of the time, you will see that market after opening, it can work a little higher, but it will go back until the 50% of that opening range gap. Until that 50%, 70% of the time, you will see that. So observe it, and if you find out some kind of confident, go for that trade. Either way, that is a specific model. Okay. So most of the time, that means 70% of the time, after opening 9:30, market actually trade until the 50% of that opening gap. Then it can reverse. Now, when it went through this buy side liquidity, which has appeared after 9:30, the buy side liquidity, market left that sell side liquidity open over there. It went higher. Where did it came? Exactly to that sell side imbalance, buy side inefficiency. Remember? And this green line is your balanced price range. Remember the balanced price range I showed you from uh, actually the Thursday price action. This is that balanced price range. Look, market was highly resistance over there. Okay, it was trying to go through that balanced price range but failed. It just failed. Trade until the 50% of that balanced price range, then it fall. So I am just going to remove this thing from my chart, but you should keep notes on your empty space and take the screenshot. Do the journal. You are doing the journal over here. Keep that in your mind. Okay. So when market went higher above this nude opening gap, tap to this that sell side imbalance, buy side inefficiency from daily chart. Then market went lower. ICT told that this bullish fair value gap, he doesn't want to see the accumulation near the 50% of that bullish fair value gap. Okay, from 1 minute chart. What do I mean by accumulation? That means one candle, two candles, three candles. It is just accumulating over there. He doesn't want to see that. Then market trade the 50% or that bullish fair value gap. Boom, rejected that area. No accumulation over there. So he was waiting to see these highs will be taken. Market has taken that high. When it has taken that high and left that relatively equal highs, market come back again. Where did it came? To that specific bullish fair value gap. ICT doesn't want to see this type of accumulation near the constant crossment of that bullish fair value gap. This thing near the constant crossment. He doesn't want to see that. Did market do that? No. Then what does it mean? That means market is actually going for that relatively equal highs. Now, when this candle, this fair value gap appeared over there, market went through this fair value gap and then use this as inversion fair value gap, went higher, take that relatively equal highs. ICT didn't want to see that. Market is going to trade until that new day opening gap. Until that area, he doesn't want to see that. Yeah, obviously market can go over there, but he doesn't want to see market is going for that. Why he's not going to look for that? Because remember the daily volume balance lower portion. Remember, this is that lower portion. That is that specific high. From that daily volume balance, go back to the beginning of this video and I showed you that it tapped to the 50% or the lower portion of that volume balance, then it fall. This is that high. Okay. That's why ICT didn't want to see it will go over there to that new opening gap. It can go, but he doesn't want to see that. At the same time, he wasn't looking for any kind of buy setup over there. No buy setup he was looking for. He was only looking for sell for this sell side liquidity, this opening gap, and especially this new day opening gap, which is created by Friday. In that specific day, this was the new day opening gap inside this new week opening gap. So this is a huge magnet. Market should come over here. Now, new week opening gap. I think told that you can use the new week opening gap for 5 weeks, but if ICT wants to use that new week opening gap more than 5 weeks, he is going to use that for 50 days or 60 days. So near about 50 to 60 days, he is going to use that new week opening gap. Obviously, algorithm can use that new week opening gap after 60 days, but ICT doesn't want to care about that new week opening gap after 60 days maximum. So over here, when market tapped to this inversion fair value gap, went higher, take that relatively equal highs, traded the 50% exactly to that daily volume imbalance. At the same time, this order block, mean threshold from daily chart, daily bearish order block, mean threshold. Here, ICT has seen this is the turtle soup. That means when market has taken this relatively equal highs, that means market has taken the buy side liquidity around that area. This is the turtle soup. At the same time, this candle open. Look at this candle open. When market go through this open, it is valid as a inversion. As a change in state of delivery. So from that area to this bearish order block, mean threshold from daily chart, all of this area is your opportunity to take sell. How far? Maybe this relatively equal lows or this relatively equal lows which market left after 9:30 open. So far we have learned from 2024 mentorship that market is going to take that sell side liquidity. Here all of this Judah swing you are going to ignore. Even there was the Fed chart always speak. So you should not look for any kind of buy or sell around that area, not buy actually. Also, you have the daily chart, point of interest over there, tick by tick market worked over there. It went lower, make a bearish fair lookup over there. Now ICT didn't mark it, so I am also not marking it. Here the order block from 1 minute chart, from daily chart, this fair lookup, market trade that fair lookup. Look at the reaction from that body, from that nude opening gap, the bodies. Look at the reaction. It closed below this nude opening gap, closed inside this nude opening gap. The bodies closed over there. Weak reached until the daily sell side imbalance, buy side inefficiency high. At the same time, this fair value gap around that area. Then ICT told that I want to see market will go through this specific fair value gap. It went through this fair value gap. He told that I don't want to see even it will touch this fair value gap. If it touches that fair value gap, it's not going to work with the upper portion. It tapped until the 50% of that inversion fair value gap tick by tick. Didn't work with the upper portion. That is the sign that market is going to fall. Where? For this sell side liquidity. Then this daily volume, daily new day opening gap over there. Okay. So around that area, ICT also showed us something about event horizon. Okay, not horizon. It's event horizon. What is that? Here you have a new day opening gap. Here you have a new day opening gap. So mark the quadrant level from this new day opening gap high to this new day opening gap low. Okay, this area. Then mark the upper quadrant to lower quadrant. So let me mark it. So here to lower quadrant. Okay, this is called daily horizon. Not daily horizon, event horizon. That means market how far it can go inside this area between two new day opening gap. It can reach until that area. This is called event horizon, where ICT actually introduced this by 2024 mentorship. We're very happy to see that. Now around that area, I would love to mark this small portion inside this new week opening gap and the new day opening gap. As you can see, market reached until that area, then left that area open. So from here to this new day opening gap, new week opening gap, low at the same time. Look at this opening gap. If you don't want to mark it until that area, no worries. Mark the opening gap low. So this small portion is still open. Price came until here, but it didn't close the whole opening gap. So this opening gap is still unfilled. What should you think when market was going higher? It started to go higher. Are you looking for buy? Absolutely not. I'm looking for sell until this unfilled area from the opening gap, because it's still open. Market should close this opening gap. And if I just mark it until that area, you can see finally market has closed this opening gap. That opening gap from 930 perfectly. Bodies respect the new week opening gap. Look, nobody has closed below this new week opening gap. Week went little lower. I agree with that, but bodies are going to tell you the story. Okay, when it closed this area perfectly, how did it close? Remember this 930 open first fair value gap? Let me change the color actually so that you can see it clearly. This is the first fair value gap after 930. Okay, so here market went through this first fair value gap over there. When it is going higher, are you willing to take sell? Buy? No, you are not going to willing to take buy. Why? Already market has been rejected from that event horizon, from that volume imbalance 50%, from that bearish order block min threshold, from after taking all of the buy side liquidity, by making lot of perfect reaction, that means algorithmic run, then this inversion fair value gap, everything is done. At the center, remember that balanced price range from Thursday, the 50%, it has traded that 50% of that balanced price range, rejected from that balanced price range. So should you think that market is going for higher again? No. It came here, went through this specific first fair value gap after 930. Then market went little higher to trade this area. See this perfect sell side imbalance, buy side inefficiency, trade that on. This highest up close body close candle, your order block, trade that order block, went through this opening gap one more time, then it tapped to the 50% of that first fair value gap after 930. I'm sorry to say opening gap. It's the first fair value gap after 930. Tapped to the constant crossment, went lower, cleared all of this imbalance, that was unfilled until that area. See, unfilled from that opening gap. It came here, perfectly closed that opening gap. Trade that new week opening gap. Body is closed at the level of the low of new week opening gap. Around that area, look at this candle. This candle open. This candle has made it as a valid order block. Tap to this order block, went higher, take this relatively equal highs, work with this sell side imbalance, buy side inefficiency, then take all of these relatively equal highs, trade that perfect area. Now, I would love to use this 930 open first fair value gap. ICT told that there is a macro from 315 to 345. That is a macro. So, if you use this fair value gap, first fair value gap, look at this candle, 345. See, where did it came? Exactly to that specific fair value gap that has created around 930. That is after 930, the first fair value gap. That is the last candle of the macro, 315 to 345 macro. That macro respect this specific fair value gap. After this low traded, then it has tapped one more time to the constant enforcement of that specific fair value gap. Then look at the displacement where above this high. Look at this run. This is also for your journal. Please do the journal. If you keep the notes from here or every day, then slowly you are going to build the confidence to trade a lot of entries with the algorithmic price action. This is all algorithmic price action. There is nothing called random. Everything is algorithmic. It's driving by AI or artificial intelligence, and this is everything proven by ICT again and again. By the way, that first fair value gap I explained before ICT. To forget that. Whatever. So that was the everything from this video. I hope that I have covered everything. If it is a little longer video, I'm sorry for that, but I tried to deliver all the information I had in my mind, and I hope that it is insightful for you. Still, if you have some kind of doubt, don't forget to write it down to the comment box, and I just explained everything step by step. So if you are confused by watching it one time, you have to watch it 2 or 3 times. You have to study this video, not just watching this video and you think that you are going to learn everything from this video. Don't think like that way. You have to study these things. That means you have to watch it 2 to 3 times. So until the next video, cheers.